Hi guys, and welcome to the channel. My name is Sam Evans and this is the Electric Singularity. And you probably noticed I'm wearing a new shirt today. I went all out because commenters have told me that unless I look more professional, I'm not going to be taken seriously. So I'm trying to be taken more seriously, so I hope it works. Give me your feedback. What do you think? Does the shirt look okay? Or do I need to go all out and go for a suit? Guys, thank you for watching the channel. I really appreciate your support, and I would really appreciate it if you would either like the video or subscribe. Now, don't like the video if you think it sucks. Just like it if you think it's good, obviously. Now, GuruFocus.com has reported that BYD stock is drastically overvalued. Now, I'm going to let you in on a little secret here. GuruFocus.com also reported Tesla stock was drastically overvalued before its enormous run over the last 2 years. Now, GuruFocus.com says stock of BYD Co is estimated to be significantly overvalued, according to GuruFocus's value calculation. GuruFocus value is GuruFocus's estimate of the fair value at which the stock should be traded. It is calculated based on the historical multiples that the stock is traded at, the past business growth, and analyst estimates of future business performance. If the price of a stock is significantly above the GF value line, it is overvalued, and its future return is likely to be poor. On the other hand, if it is significantly below the GF value line, its future return will likely be higher. At its current price of $40 per share and a market cap of $57.8 billion, BYD Co stock shows every sign of being significantly overvalued, according to GuruFocus. Now you can see GuruFocus value for BYD Co is shown in the chart. Now, because BYD Co is significantly overvalued, according to GuruFocus, the long-term return of its stock is likely to be much lower than its future business growth, which averaged 14.3% over the past 3 years and is estimated to grow 16.94% over the next 3 to 5 years. Now, guys, here is the first error these clowns have made. Now, this is why I suggest you do not listen to mainstream Wall Street analysts when you purchase stocks, as basically none of them had any idea when it came to Tesla at all. None of them, except if you consider Cathie Wood a mainstream financial analyst. Now, the fact that these guys are predicting BYD will grow at a rate of 16% over the next 3 to 5 years is utterly ludicrous. However, I digress. GuruFocus says investing in companies with poor financial strength has a high risk of permanent loss of capital. Thus, it is important to carefully review the financial strength of a company before deciding whether to buy its stock. Looking at the cash-to-debt ratio and interest coverage is a great starting point for understanding the financial strength of a company. BYD Co has a cash-to-debt ratio of 0.57, which is on the middle range of the companies in vehicles and the parts industry. GuruFocus ranks the overall financial strength of BYD Co at 5 out of 10, which indicates that the financial strength of BYD Co is fair. This is the debt and cash of BYD Co over the past years. Now, remember when looking at this chart, BYD Co is in an industry which is in the process of completely disrupting one of the world's largest industries. Obviously, BYD will not grow at a rate of 16% over the next 3 to 5 years. It's much more likely to grow at a rate of between 50 to 100%. That is certainly my prediction, and that is why I own the stock. Now, if you're wondering how to buy the stock, because of course it's listed on the HKSE, then I'll be sharing with you guys a video for Australians and for other people in other countries outside of the US or outside of Hong Kong and China that will show you how you can purchase this stock and the best ways to do that as well. Getting back to GuruFocus, who say it is less risky to invest in profitable companies, especially those with consistent profitability over the long term. A company with high profit margins is usually a safer investment than those with low profit margins. Of course, this didn't apply to Kodak right before they went bankrupt, or at least only a couple of years before they went bankrupt. Guru Invest says BYD Co has been profitable 10 years over the past 10 years. Over the past 12 months, the company had a revenue of $26.5 billion and earnings of 45 cents per share. Its operating margin is 7.3%, which ranks better than 71% of the companies in the vehicles and parts industry. As you can see, the vehicles and parts industry have very low margin. I think BYD's margin will continue to increase as they continue to build their own cars using their own battery technology. Imagine you're a company such as Toyota or Hyundai who needs to use other companies' battery technology. Even Tesla does to some degree. Then, obviously, you need to buy your parts, motors, batteries from other companies such as BYD, and of course, BYD make a profit on the sale of those parts. Then you need to factor that into your margins. Margins will be very tight for BYD's competitors over the coming years. Overall, the profitability of BYD Co is ranked 8 out of 10, which indicates strong profitability. This is the revenue and net income of BYD Co over the past years. See the chart. Guys, I'm going to jump in here. Now, remember, BYD's PE is around about 93 right now. Tesla's PE is around about 650 right now. Obviously, that means BYD is probably valued more on what its sales will be in 2024, whereas Tesla's probably valued more on what its sales will be in maybe 2026, 2027. Don't get me wrong, I think Tesla's stock will 10x by 2030, but that's based on future opportunities. However, when we compare it to other Chinese automakers, remember there's around 400 automakers, battery makers, e-mobility manufacturers in China. There's a huge, huge number of them. But when we compare it to other popular ones like NIO and XPeng, whose PE is well over 1,000, you can see that BYD is actually a fairly well-valued company. And it's a company poised to disrupt an enormous market. In fact, it's not just poised to disrupt the automobile market, it's poised to disrupt the world's absolute largest market, which is the energy market. Guys, remember, growth is probably the most important factor in the valuation of a company. Now, Guru Focus's research has found that growth is closely correlated with the long-term stock performance of a company. Now, of course, because they've undervalued its likely future growth performance at 16% per annum, therefore they're devaluing the value of the stock. A faster growing company creates more value for shareholders, especially if the growth is profitable. Now, BYD is currently a profitable company. The 3-year average annual revenue growth of BYD Co is 14.3%. Obviously, you need to factor in the fact that Chinese companies were drastically affected by the coronavirus last year, and that significantly damaged BYD's growth. However, this year, their growth has doubled. That's 100%, a lot more than 16. So BYD's growth of the last 3 years at 14.3% ranks better than 88% of the companies in the vehicles and parts industry. That's a good indicator. The 3-year average of EBITDA growth rate is 14.7%, which ranks better than 81% of the companies in the vehicles and parts industries. Guys, remember, one can also evaluate a company's profitability by comparing its return on invested capital, its ROIC, to its weighted average cost of capital, which is WACC. Return on invested capital, ROIC, measures how well a company generates cash flow relative to the capital it has invested in its business. Obviously, BYD is investing a lot of capital right now into growing its business, and I think that is important. The weighted average cost of capital, WACC, is the rate that a company is expected to pay on average to all its security holders to finance its assets. If the return on invested capital exceeds the weighted average cost of capital, the company is likely creating value for its shareholders. During the past 12 months, BYD Co's ROIC is 8.38, while its WACC came in at 7.4. The historical ROIC versus WACC comparison of BYD Co is shown in the image. Now, to summarize, guys, GuruFocus.com says the stock of BYD Co, based on its steady financials, is believed, in their opinion, to be significantly overvalued. They say the company's financial condition is fair and its profitability is strong. Its growth ranks better than 81% of the companies in the vehicles and parts industries. Now, keep in mind, BYD boasted a 60.5% year-on-year leap in January to April 2021 sales. BYD said its new electric vehicle sales reached 45,234 in April 2021, surging 42.2% year-on-year, while growing 10.6% month-on-month, according to the company's latest monthly sales results. Regarding year-to-date performance, the automaker sold 149,379 vehicles in the January to April period, posting a substantial increase of 60.5% from the year earlier. As of April 2021, BYD had seen its monthly sales rise year-over-year for 10 consecutive months. With 25,562 vehicles sold, BYD's new energy vehicle business scored a 97.5% year-on-year sales surge in April, thanks to the precipitous rise in the PV sales. Among the new energy PVs sold last month, there were 16,000 BEVs, up 61.7% year-on-year, and 9,000 FEVs, up 288.5% year-on-year. Remember though, at the Auto Shanghai 2021, BYD announced the Tang DMI officially hit the market, which came with 3 trim levels with prices ranging from 189,800 yen or $29,505 US and 216,800 yen or $33,700 after subsidies. The BYD Tang is built on the BYD DMI platform. The new model is powered by a plug-in hybrid system combining with a 1.5-litre turbocharged engine and an electric motor, and it uses a lithium iron phosphate blade battery. Meanwhile, BYD also launched the E-Platform 3.0, which is designed for the next generation high-performance smart EVs, including Toyota EVs. The EA1 also they launched the all-new electric hatchback. This will obviously take the world global EV market by storm. I predict sales of the EA1 to increase by a minimum of 1,000% year-on-year versus the previous model. In fact, I think I'm being conservative. I think 2,000% might be more likely. Now, BYD's oil-fueled vehicle sales in April climbed 4% from the previous year to 19,572 units. To be specific, SUV sales dropped 13.7% to 13,000, while sedan sales shot up a surprising 160% to 5,600 units. Now, obviously, BYD is investing more of its funds into battery generation, into manufacturing EV parts, and into battery facilities. Now, we know for certain that right now BYD is expanding one of its factories to provide the production lines for right-hand drive Australian model EVs. Now, it's a certainty that these EVs will sell extremely well in Australia, as there's been a huge response to the MG vehicle, the MG crossover, which has poorer specs and is a less well-known company than BYD is in Australia. So look to see similar results in other countries such as Norway, and I believe in future BYD will be selling their electric vehicles in the United States and in a range of other countries such as Canada and Europe. Now guys, remember, the world's greatest investor, Warren Buffett, owns 8.4% of BYD, and he's owned that for over 10 years. Warren Buffett is a fundamentals. He invests on fundamentals, which is why he never really invested significantly in Tesla, and why he's always believed Tesla is overvalued. And yet he owns stock of BYD. I believe Buffett doesn't see BYD as overvalued. In fact, I'm convinced he doesn't, and that's why he has held on to the stock. There's nothing making him hold on to BYD stock, and yet he chooses to hold on to it. It is my opinion and my belief, based on the information we have now about the blade battery, about Toyota using the blade battery, about Hyundai using the blade battery in China, about the vehicles that BYD are now manufacturing, about the buses they're manufacturing, about their growth in overseas markets, Norway and Australia, which I believe will be replicated in a series of other countries. I believe BYD is on the precipice of enormous growth in the same way that Tesla is. Now, in the past, before researching BYD, I only owned Tesla stock. I now own Tesla and BYD stock. I've invested some of the funds that I previously had invested in Tesla into BYD, as I believe both companies are likely to be hugely successful over the coming decade when the electric revolution completely disrupts ICE power, completely disrupts energy. Not just energy, not just cars, the entire world market for energy, cars, automobiles, batteries, everything. It's my recommendation, if you can, to invest in BYD and Tesla. However, my personal recommendation at this point, based on their current values, is to avoid other automakers. Guys, thank you for watching the video. Please remember to subscribe. And if you have any questions at all about why I've chosen to invest in Tesla or BYD, put them in the comments below and I'll do my best to answer them and provide some clarity. Once again, thank you for supporting the channel. I look forward to seeing you on the next one. Bye-bye.